So again, a very good evening, everyone. If you haven't already, again, downloaded the template to use on tonight's training call, just head over to, again, the website, OURGWT.com. And on the left banner, okay, you're going to see different links here. And basically, for your information, what I've done here with Lior together and the other leaders of the GWT MIM Elite team is we've actually put all the trainings that someone needs to know in actual alphabetical order. So there's a 5-minute napkin presentation, approaching training, branding parties, comp plan comparisons, the comp plan pitfalls and product pitfalls, general comp plan training, did your due diligence for people who are looking to more research. It has all the links there as well too. But for tonight, we're going to head over to the tax information button. So click tax information. And of course, here at the very, very bottom of this page, I do have this training already recorded previously. We have, of course, a training when we had a special guest, Sammy Botkins, talking about taxes. But also, of course, the bottom training here is actually me doing this training tonight. But of course, also recorded there too. But the document you want to get for now is under exercises. It's called the tax benefits fill in the blank for Ontario. So if you just go right click and save that, you can follow along. If you get a chance right now to print it out, go ahead and print it out. And of course, we can use that for tonight's training. So we're going to be getting started in about another 1 or 2 minutes. So please hang on tight, and we'll get started very soon. So thank you for being on the call tonight, and hang tight. Thank you. All right, folks, again, so we're going to get started in about 30 more seconds from now to cover, again, the key part of any kind of business that you have to know about, especially if you're in a business, is the tax benefits that come along with the business here. So again, so I hope that everyone had a chance to, of course, go onto the website and download a copy of the tax benefits fill in the blank sheet there. You will be using that later on once you understand more details of the tax savings. So without further ado, we're going to get started right now. And basically, for taxes, I want to start by saying that, a bit about who I am. I've been with the company now for about 6 years. I am, but more importantly is that I've been doing different businesses my whole entire life. And of course, from a very young age, I started to learn about the key benefits of tax deductions or tax savings, or just tax in general when it comes to businesses. And so, of course, usually I have my accountant with me during these tax trainings, but he's very busy as well too. But one quick disclaimer that we have to talk about tonight is that this whole tax disclaimer, just to, of course, make sure everyone here is very clear on this. But taxation is a very complex subject, and we do not claim that the tax information in this training is error-free. It is your own risk, and you have full responsibility resulting from the use of this general tax information. I am not intended to provide professional tax advice, investment, consulting, or other professional accounting, legal, or tax services. I am not a trained accountant, and the tax information in this PowerPoint should not be regarded as offering a complete and detailed explanation of the taxation. Before taking any action which can affect your business or personal finance, you should consult a professional and qualified tax advisor. We cannot be held responsible for risk taken or for any loss due to use of any tax advice in this page. The numbers in this example are not tailored to anyone's individual situation, and proper record keeping is required for you to make any expense claims for your business. Now that being said, though, of course, I have again been again in many different businesses here, and my knowledge regarding taxes is very high. So again, the train tonight, just to clarify, I'm not an accountant, a certified accountant by any means. You want to consult your own accountant, but again, I do have a lot of knowledge that I've been able to sort of benefit from over the past few years. So the question is, first of all, is why are you here? So first question is, do you feel you pay too much in taxes? And most people would say yes. And of course, does anyone here not feel they pay too much in taxes, right? But more important is, who here likes paying taxes? Yeah, and I get like weird looks in the room here. No one likes paying taxes, right? And of course, are you aware of the taxes that you pay in Canada? And most of us aren't even really aware of the tax we pay in Canada. And to show you exactly what you do pay in Canada, so I show you guys on Wikipedia, the topic taxation in Canada, you're going to find out here that aside from, let's see here, your income taxes, which we have to pay, and again, depending on which province you are, your taxes will be very different. So in Ontario, of course, we have a 13% tax. It's less in some other places, more in other places as well too. But again, we of course have our personal income taxes that we have to pay. If you have a company, then you need to pay corporate taxes for that. And then, of course, on your payroll, a lot of the taxes are also taken off during your payroll. So, for example, the Canada Pension Plan is taken off of your payroll, plus the employment insurance. And it's funny because if you look at the CPP currently today, it's kind of getting smaller and smaller. So by the time most of us retire, it's a big question mark whether or not we're going to have a lot of CPP left, right? So, of course, we also have the employer health tax in Ontario. And that's just one additional tax we have to pay. But then we have the sales tax. So again, in sales tax, when you buy something, in Canada, it's now currently 13%, right? That's the HST here. So as you can see here, Ontario, 13%. Port Nova Scotia, they're paying 15% over here. And of course, different places, so the lowest ones is Alberta. But again, most places here pay quite a lot, of course, in sales taxes. Then we also have excise taxes. Now, these are also known as sin taxes, where if you smoke or you drink, there's a liquor tax, there's a tobacco fee, right? So all of those fees, whatever you want to call them, if you track where it goes back to the government, which is essentially like another tax, right? Then you also have this funny one, the vehicle air conditioner tax, right? So if you ever like sell your car or buy a car, there's this vehicle air conditioner tax, it's currently $100 per unit. I heard about airbag taxes now as well too. So a lot of things that you don't even realize, even gasoline. Did you realize that you pay a gasoline tax? So on top of the tax you pay for buying gasoline, there's actually a gasoline tax too. Then of course we have property taxes. So again, we all pay property taxes when you own a house. And of course it just went up by 2% as of last year's time frame. And then we have estate taxes. So when someone actually dies, or when you die, you want to pass on your property to someone else, guess what? There's a tax to be paid. Even when you actually sell your property, so when a land transfer tax, when you transfer your property to someone else, guess what? There's another tax you actually pay. So it's more taxes, right? So it's insane, really, in Canada. And there's a bunch more. For example, my PowerPoint kind of covers it here, but one question I asked before I cover more other kind of things is, would you rather want $1 saved, or would you want $1 earned? And I'll let the gentleman in here make a choice each. So, Junior, would you prefer $1 saved or $1 earned? Okay, $1 saved. Okay, and Sohail? Same or answer, a different answer? Okay, $1. Okay, so it's a very kind of tricky question because some people believe that $1 earned is great because you're actually making some money here, but maybe actually we'll reword it as we're simply talking about the mathematics here. So $1 saved means that in your pocket you have a full dollar, right? But $1 earned means that you made that dollar, but guess what? There are taxes. So then you get taxed on that dollar, and it's not really $1, right? So if you had a choice of in your lifetime, do you want to just collecting dollars or making dollars? I'd rather collect dollars. That's like saved money, right? Okay, so but what about fees and licenses? What about those things over there? So what type of fees are out there? Well, for example, what's this hunting license, right? I don't get the whole purpose of this hunting license, because a hunting license, of course, is something that you have to pay if you happen to go hunting. But really, what is the purpose of a hunting license? It's just more money for the government, right? Like, why do we need to pay a license for hunting? Well, how about... Oh, really? They can't hear me? So, can you guys hear me okay on the call? Okay. Yeah. If you cannot hear me, can you please send me a message onto the webinar? Because I just realized that some people might not be hearing me. Can everyone send in a quick message and just confirm that they can hear me? Yep. Okay, so someone says clear and loud. So people can hear me as well too. So there we are. And we'll continue the... Yeah, everyone can hear me as well too. Yeah. So, okay, fantastic. So all in all, guys, um, aside from the hunting license, we also have what else? A fishing license, right? And again, what's the purpose of a fishing license? Why do we have to pay a license to go fishing? Because more money for the government, right? Okay. And what else can you think of in terms of licenses or fees? Your driver license, right? And how about your license plate fees, right? So if you look at all the different fees that you pay, it's like insane, right? So to calculate exactly how much you do pay in taxes, what you can do is you can go to this website over here, okay? And again, I'm always referencing the CRA websites here for the most accurate information. But you can see here that depending on, there's two kinds of taxes, right? There's a federal tax and then there's a provincial tax. And of course, depending on what level of income that you make here, the more tax you pay. So typically, the more money you make, the more you pay. So federal-wise, all over Canada, whether it's Alberta or Ontario, on the first $43,000, 15% is your taxable income. From that, and beyond, from 43 to about 87, you're about 22% in federal alone. But then we have the provincial taxes down here. In Ontario, again, depending on your level of income, you add on another 5, 9, 11, or 13%. So on average, if you're making between 30K and 80K a year, take the 22%, add on the 9%, about 31%, right? So that's why I always talk about, on average, you're paying about 31% tax every single year. And so really, it's important to understand this because I know of some couples that they have, for example, one father working and the mother is not working. The mother has a child, and now they're thinking, well, we have a baby, we need to get an extra job. And it's funny because then the mother goes out there and gets a job, but the income she's making, she's paying taxes on. But who's watching the child? No one. They have to go and hire a babysitter or a daycare. And most of the time, the money that the mom makes after taxes, when she uses that to pay for the daycare, in the end, they're not really making that much more money. Like for the time that the mom loses from the child, if you actually do your math properly, in some cases, it's not even worth it. And that's where, the question is, do you want to learn about the benefits of having a home-based business in relation to tax deductions? Everyone says yes, because according to Sandy Bawkins, every North American taxpayer who works a full-time job and does not have a home-based business is probably overpaying taxes to the tune of $3,000 to $9,000 every year. And Sandy Bawkins, again, is a former tax attorney, former IRS general counsel. So he actually trained IRS agents. So he understands very clearly the ins and outs of taxes. Again, the US taxes is very similar to the Canadian taxes as well too. So if you want to read more, in this document here, it actually is Sandy Bawkins talking about different scenarios, and the scenarios gave to you guys about the father and the wife wanting to get a job is covered in here, and he shows that in most cases, it doesn't really make much more sense if the mom's working and only making an additional 20, 30 grand a year. Because it's, with that post-tax money you bring home and the daycare you're going to hire, and you have to cook food the night before, it's not even worth it. So what are the list of expenses you can actually claim towards a business here? And what's the rule on what you can deduct? Again, on the CRA website over here, you can see that there are a bunch of expenses here. And by the way, this PowerPoint I'm using, if you want to find it under the tax information website, I should have the PowerPoint here, which I currently, let's see. Okay, well, it's not here, but I'll put the PowerPoint for this training on the website over here if you want to get the website, the PowerPoint. But in the meantime, though, again, if if you have advertising, that can become a business expense. Capital property, bad debts, business startup costs. So in GWT, what would be your business startup costs? The packages, right? Yeah. Okay. Again, there's more details in terms of what you can write off, but the packages count as a startup cost. Then you have business tax, fees, licenses, dues, memberships, and subscriptions. So, for example, if you have different kind of memberships that you have to pay, your monthly IA, for example, like for the products, right? You have to pay that in order to make the income. Junior just said here, your day pass or the office passes, which is $5 right now. That again counts as part of your business here, right? But also business use of home expenses. Now, a lot of you guys have homes and you might have like a home office. A lot of those cannot be expensed too. More things, for example, fuel costs, your insurance. Insurance could be your car insurance or could be even your home insurance. Legal accounting fees. By the way, I always pay someone to do my taxes. I don't like to do it myself. And why do you think that is?
Experts.
Aside from the fact that I know a lot about it, but accountants are the experts. But what happens if you were to accidentally, because the CRA does randomly audit the population, and you might be in that random audit, right? But what happens if you got an audit? Do you want to be the one to have to go and deal with the CRA agents or the IRS agents? Probably not, right? So to me, it's worth paying $100 more for an accountant to represent you, and in the worst case scenario, they are the ones who will be representing you in those sort of cases. So it happened to me. I was actually in Taiwan last year, and I got a random audit for '09. And guess what? My because I have an accountant, he did everything for me. I was in Taiwan, relaxing. I didn't even have to fly back. Now, if I didn't have an accountant, what would have to happen? I would have to fly back to Toronto and give him all the files, right? Because my account has everything, I don't have to worry about that. So it's worth the headaches to pay an accountant to do it for you. Okay. Yes. Yeah. Thank you very much. And the fee that you pay for the accountant also becomes a write-off as well too. Right. So be smart about this, right, guys? You don't want to waste time because time is money. Okay. Maintenance and repairs, could be for your car, for your house. For example, my house here, if you have a home-based business, if you do a house repair, then again, a portion of that, of course, if you have a portion of your home for the business, now it could become tax write-off too. Meals and entertainment. Now again, in meals entertainment, it's amazing because really, if you talk to someone about the business while you are, having a meal together, 50% of that amount can then basically become an expense. So you can't write off the entire thing because if I buy coffee for me and Gary, and of course, Gary's my prospect, the whole idea is that I actually drank one coffee. So the general rule is 50% on the dot can be expense. And of course, for a lot of the other kind of expenses here, even things like entertainment expenses, okay? If you happen to take a client out to watch a basketball game, but the whole purpose was to build that rapport and to get that client to want to join your business or buy products from you, that is part of entertainment as well too.
Including the beer, really?
Again, in terms of liquor taxes, again, or liquor, if you buy a beer for someone, again, definitely a lot of the big accounting companies will treat their employees to like a night out at a restaurant. And again, as long as the purpose was for business, it can be, yeah. So, of course, motor vehicle expenses, office expenses. Office expense is a big one because, for example, if you have, for example, pens, pencils, paper clips, stationery, and stamps, right? Things that do not count are calculators, filing cabinets, chairs, and desks. These are capital items, okay? But of course, to me, other things like if you buy a laptop, that's definitely for the business. If you bought the palm guard, like I did for my laptop, if you bought the screen guard and the screen casing, and of course the extra cables on the side, all of that is for the business, right? I can't do my online business without a laptop, right? If you buy paper, pens, that kind of stuff too, all right? So, of course, we have property taxes, rent. If you do rent, okay, so if you have a primary residence, but you're renting another location for the business, for example, if you happen to be living with your parents, but you rent another place for the business, then that other place is 100% business use then, right? It's a whole write-off, okay? But if your primary residence is the rental location, then it's a square footage. Now, safety-wise, it's safe to say that you don't want to go over 20%. So you don't want to really claim that more than 20% of your residence is actually for the business. It's a bit excessive. So just keep yourself moderate. Don't raise red flags. 20% is a good rule, okay? And of course, your telephone, utilities, and travel. So again, we are in international business here, right? So if you fly to the Philippines and you have some meetings there, as long as you can, have made some phone calls before flying that you intended to do business in the Philippines before you went there, then of course you're traveling there for, of course, the business as well too. There we go. That's all the expenses you have here. Moving along. More importantly, how to, of course, track your expenses. General rule is keep everything. Okay, why is that? Why do you have to keep everything, all your expenses and receipts? The audits, right? And how many years can the audit go back to you on? Some say, 7 years, right? However, if the case is reasonable or required, they can go back even more than 7 years. Oh, wow. Yeah, if they really have to, if it's a big case. Okay, I've heard that it could go past 7 years. So you want to keep everything, okay? That includes all your receipts, invoices, bills, everything, and be detailed when you look at your expenses here. So you want to make sure you put down who, what, and when. So for example, I bought this Tim Hortons coffee, of course, okay, and I was doing a meeting there. And what you always want to do, because the ink will always fade on printed receipts, right? What you want to do is you want to always circle the date or just rewrite the date again. So rewrite the date, rewrite the amount. That's number one. Because if you get audited, what they want to know is, what did you talk about, how much was the amount, when was it, and what did you talk about for the business. If you can't describe to that auditor, well, on this day at this time, for this amount of money we talked about such and such with who, then they might disallow that write-off. Okay, so in all my receipts I put GWT, I put who was there, me and Gary, for example, and Junior and Sahil, and I'll say what was the purpose. I'll say, and write this down. Here are some ideas of what you can put down on your receipts. Okay, the first one could be, for example, introduction to GWT. So I love the fact that a lot of times when you're actually out there, again, meeting people for the business, one biggest thing that you will be talking about again is the different kind of things you can put down on the actual receipt. Okay, is introduction to GWT. So that's like you're trying to slowly warm up your client to know more about GWT. So the whole purpose of that meeting was just to introduce them a little bit to GWT, right? Then it could be, as well as the second one, it could be GWT tour / presentation, right? So another type of way you could describe what you're doing at the back of the receipt is you put, again, a GWT tour or presentation. What are other things that you can write down to describe the purpose of the meeting that you're doing? It could be training, yeah. So it could be training, and you want to be specific. Was it launchpad training, right? Was it next 30 days? Product training, con plan training, right? There's so many things, but the more detail you have, the much better it is. All right. Yeah, it could be tax training. There you go, tax training, right? Yeah. What else could you have? Yeah, follow-ups. I don't know, because for myself, usually I might even have up to 4 or 5 follow-up meetings with the same person. And it's okay to have follow-up because we always teach infinite follows, right? So if it's a follow-up, just put follow-up, okay? So again, the main things you want to put here, again, are what? You want to put down, write down GWT, because you need to make sure that you know what you're doing the business for, right? GWT, write down, of course, who was there, right? So always make sure you write down who was there, like everyone, okay? You also want to, again, sorry, 1 second here. I hate PowerPoints. There you go. Okay. You also want to write down, you want to rewrite, again, the date and the amount and the purpose of the meeting. Okay, so just to show you guys in the call what this looks like, I'm just going to resume my PowerPoint here. There we go. There we are. That's what you should have. Okay. Okay. So then of course, so expenses, track everything. So in terms of tracking your expenses, now there are some tools out there that you can actually purchase, like on your iPhone, called like TurboTax, for example. And TurboTax, what it is, every time that you actually have a receipt, you can actually punch into your phone. It asks you all the questions, right? The amount, date, you punch it in. If you want to pay for it, you can. I don't use that. I just use a simple spreadsheet online, and I'm going to share with you guys the spreadsheet that I use to track all of my expenses all too. Okay. Um, you also want to make sure you go and buy yourself from Staples a 12-month folio. So write that down. Go buy yourself a 12-month folio from Staples. It's basically like a little binder that has 12 different months inside. Okay. And what you want to do is for all of your receipts from January to December is put all the receipts for January into the slot for January, February, March, all the way to December. Okay. You also want to buy yourself a car mileage tracking logbook. Okay. Because you have to track how much of your mileage that you drove was for the business. So if in 1 year you drove 10,000 kilometers, the question is how many of those 10,000 kilometers was for the business, right? If half was for the business, then half of your driving expenses can now be expensed. Okay? And so, um, I have some templates on my website. You can go and download it as well too. I'm going to show you what it looks like now. So on my website here, I actually do it through my Google Drive. Okay, so on Google Drive, and on Google Drive, if you go to my website, you will find the GWT. Yeah, so over here on my website, okay, you will see at the very bottom here. Do you see here the business expenses tracking sheet template? Okay, you might want to make a reminder about whatever it is, but if you download that link there, it looks like this. Okay, so again, it's called the business expenses tracking sheet template. Okay, and if you click on that link over there, it'll actually bring you to this GWT expenses, and here is what I use for myself. So in here, you have first column GWT, second column is date, description, cost, category. Now shared is if you have a partner. If you don't have a partner, don't worry about that. But it's just to say yes or no if you track it, if you share or not. So basically under the first one here, you'll see here that I have my cell phone. So for me, my cell phone is 100% for business. So if you have a home phone and a cell phone, then your cell phone becomes 100% for the business, right? Okay? And you put down, literally just put down all the expenses there, whatever it might be. Okay? Then you have your internet. So internet, if you have internet again too, just want to do this, and again, you can just enter your cost for internet. Then of course for TrueCash, when you actually withdraw your money, it's a little small fee you pay, right? I tried that too. When you get paid in GWT, there's a $5 load fee, right? That goes in here as well too. Then there's other categories here I wrote down for you guys, right? The travel, taxi costs, your flights, transit costs. If you have office supplies, like you buy an iPad or laptop, printer, ink, paper, pen. This one here I should remove because table and chairs don't count. Not in office supplies. They count in as capital K. So that, but you can still write it off. It's just be in this category here. Hard drives, phone case, tickets, boot camp, office pass, day passes. I have my silver spray, my tungsten spray, my cleaning cloths for my for my laptop or for my products here too. If you happen to rent, okay, so for me, my whole entire rent is for the business, so it's a whole write-off there. Promotion items and expenses. So what is this? Basically, again, let's just say that I had like a promotion for my team where if you were to sign up another Diamond Package member, I give you an extra bonus. Okay, it's like a promotion, right? So, and that bonus might be a gift card from Starbucks, or might be $100 gift card from Renfrew, right? So, So the whole idea is that if I basically give, you know, an incentive, and the incentive is a gift card from like whole Renfrew, right? Then again, that becomes part of a write-off as well too. So you know, if you guys go shopping, you know, then of course, you know, if you were having to, you know, instead of shopping, buy that gift card to incentivize someone in your team for doing work, then that gift card would become a write-off. And again, the whole idea is the person you bought a gift card for uses the gift card, you know, for their own benefits, right? Okay, so moving along, and of course, you know, so again, here you are. So again, the promo items again is, for example, this is more for the products that you buy for your team, whereas this is more for like the gift cards or incentive awards. So you know, when we have the annual convention, we have incentives. You know, do this amount of stuff, get this amount of stuff as well too. Promo items is more like if I want to give a, you know, promote the business, and it just so happens that during Christmas time, I want to promote the business, and I give gifts of fairy or posh to people, you know, during Christmas time, to promote the business, then that that item has become a promotion expense as well too. Okay, so moving along, if you happen to have meals, entertainment. So again, you know, with this part here, if you happen to eat or drink, which we all do, then again, you know, if you just talk about the business, or the purpose of the meeting was for the business, and the meal was about the business, then of course that's a whole write-off there. So the whole purpose of this document here is simply to track everything. Now you notice here that I actually separate the meals from everything else, because meals is only how much write-off? 50%, right? So I track it separately than everything else here, okay? And the whole purpose here is to give this last total to your accountant. So you don't want to pay your accountant for simple bookkeeping. They'll charge you an arm and a leg, right? It's, you know, this literally takes like an hour or a month to do this kind of stuff, but you're going to guarantee yourself a nice juicy tax return, right? Okay, just by tracking your expenses. So people, I don't get, some people want to get a promotion at their work and they work like 30 hours overtime, but there's no guarantee of getting a raise. You do this, you're guaranteed to get some tax savings, right? So okay, I also have a different template when it comes to your car. So for example, car example, right? Your car example, so I have the mileage book. I use a spreadsheet just to enter in just to tally up the mileage. So I don't want to like count on a calculator how much mileage is from the logbook. So I use a spreadsheet to punch in the numbers, and then I do a formula to count the total mileage. So I just like, there's no description here because the description is already in my mileage book. I just use the numbers to sum together, right? Okay. And then under the bills here, so for example, you know, all your gas bills go over here too. Then you have, if you, know, if you lease your car, it goes over here. Maintenance, emission test, Lexus repair and bumper. My wife backed up the car into my aunt's car.
Sure, it was your wife?
Yeah, it was my wife. Yeah, yeah, it was my wife, and you can ask her about that. You know, not someone else. You know, in-call stuff. Washing fluid. You know, new tires, rotation costs, oil change, registration, plate fees. So the whole purpose, so you want to take the totals of all of this, all the totals, then you calculate how much of your mileage was for the business. So if it was half of the 10,000, 5,000 was for the business, then half of all of these expenses can be expensed too.
So that is 100% of your business
Mm-hmm. Yeah, so if you haven't, so the question was, is your travel then 100%? And the answer is, you know, if you flew to Ireland just to do talks about GWT, about you know, in Ireland, then your whole flight 100% would be a write-off. Okay, by car, you know, it depends on the percentage you drive. So if you have two cars and one car is personal, one car is business, then the business one 100% is the business expense. Whereas if you have one car, it's the percentage as well. Okay. So going back here, and of course I also have a home expense example. Where is it? Home expense. I can't find it. Oh, sample. There we go. Thank you, Gary. Thank you, Gary. Yeah. Okay. So you know your home insurance here. your hydro bills, your utilities. For me, I put my son's daycare under 5 years old here as well too. It's like 3,000 a month, so it's worth to write it off. I'm just kidding. Okay, but that's there too, right? If you rent, your insurance on your mortgage, medication. So if you actually are self-employed and you don't have a benefit plan, then any cost you put for medical stuff, I believe, can also be a write-off. That's why I remember from my kind of telling me. But also, if you have like renter's insurance, if you rent a place, the insurance you pay is also a write-off as well too. Okay, now on to the juicy part. Now that we all understand how to track our stuff, again, what else do you need though? So now we know to turn your business expenses or your current expense into a business expense. What do you need? You have to have a business, right? So you have to have a sole proprietorship. You do not want a corporation. You don't want a partnership in most cases, because when you earn income through a corporation, then the expenses you incur through the corporation can only be expensed against the income earned through the corporation. So it has nothing to do with your personal day job. Whereas as a sole proprietorship, like if you open your own, for example, some kind of a pizza store or whatever, and it's not a corporation, it's not a partnership, or you're selling clothes or you're doing makeup, and it's a sole proprietorship, or you have your at home dentistry business, whatever it is, right? Then the income that you earn, is from your personal current job, and then the income you earn through the business is almost like put together, and the expenses from your business is put together against the income that you earn. So that's why you want to have sole proprietorship, okay? And you can read more about this on the CRA website. And what you also want to do during tax time is you want to fill out the T2125. So if your accountant currently does not fill out the T2125, it's called the Statement of Business Activities form, then you want to make sure you go and call and say, why are you not helping me with the T2125? Okay, and you fire your accountant, and you'll get a different one. Again, not all accountants are made equal. You want to make sure you get one that actually understands the not just businesses, but the home-based business segment as well too. Make sense? Okay. So, and in that form, what you want to put is Global Wealth Trade Corporation. That's how you have your own sole proprietorship. Okay. Then you give your totals from your expenses to your accountant. Again, I would always suggest you go to a certified accountant. And now, so the whole tax training is done. I want to show you guys now, more importantly, is again, part of this training was for you to know more about taxes, to become educated. But more importantly, is I want you guys to know how to use this in your benefit when you're talking about GWT. Because there have been some times where for example, I met a friend and we're just chit-chatting over some beers, and he asked me, well, I kind of, carefully brought up, hey, how's your work? How much you make? I mean, you must be making a lot of money. Man, are you paying a lot of taxes? So I kind of asked these proactive questions to my friends. Like, are you paying a lot of taxes? And everyone always says, oh, yeah, I'm paying a lot of taxes, right? And I'm just like, aha, okay, yeah. So, and I was like, actually, you know what? I actually know the way, a very, very smart way, through having, your own sort of, you ever hear those people who have their own businesses and get these tax savings? So I asked that question. You ever heard those people who have their own businesses and get these tax savings? They're like, yeah, I know those type of people. And then that's how I started the whole conversation. And what I did was, the person I was talking to, I didn't tell them anything about the business. I just showed them this one page, and so I had to fill it out. After they filled it out, they're asking me, "Well, Renee, I need a business. Do you know of one?" I was like, "Well, actually, I do know of one." And so I want to show you guys how to use this for yourself first. But so while you're doing it for yourself, I want you to use your own numbers, your own figures. But I want you to learn this for yourself. But more importantly, to show someone else the same thing. Okay. So expenses, there's monthly and yearly column. What you want to do first is under the monthly category, I want you to enter in what is your monthly expense for your cell phone. And I'll do it for myself here too. My own monthly expenses for myself was $120. Okay. So yearly is 120 times 12 months. oops, not 0.2, but times 12 months is $14.40 a year. I have the unlimited plan for like US, Canada, like 6 gigs of data, and I can basically like my phone can like cook me dinner thing. So okay, so go and fill it out. Yeah, fill it out. Yeah, let's do it together, guys. Okay, and then put in your internet cost monthly. So what's your monthly internet cost after tax? I believe mine is like, for example, like I think it's 80 a month. So 80 times 12 months is 960. So if you have a calculator or an iPhone or a J phone or Z phone, whatever you, notepads, iPads, not female pads, it's just iPads, that kind of stuff. You can use it, and you get your calculator out and just punch it in there. Okay. Then when you get to car, we're going to actually go to the next column here. So under car, what you want to do here is move down to the second box, which is the car column. Okay, it's the box below. And under your insurance, put your car insurance. Okay, hopefully you're getting speeding tickets. I think my monthly car insurance is like $248. 248 times 12. Yeah. And then your fuel, I think I spend about 100 a week. No, yeah, 100 a week on fuel. So if you have $100 a week, what do you times it by? 52, right? Because in 1 year there's 52 weeks.
Right.
So 100 times 52. Yeah. Okay. And then under maintenance, which is your, if you're in Alberta or, and you have like heavy rain and snow and you have chip windshields, it's like $1,000 a year in maintenance. I would say, $500 to $1,000 a year in maintenance is average. And that includes things like your oil changes, your license renewal fees, your license plate fees, registration, alignment, tires, winter tires, summer tires, fluids, right? Okay. And I'll just say $1,000 a year, whatever, or just make it easy. And if you lease or finance your car, right? So if you lease or finance your car, let's put an example here, that goes there too. Okay. So the nice thing about a lease is your whole entire lease amount goes as your expense, right? For finance, it's almost the whole thing. If you own the car, there is a capital cost allowance that you can write off too, but it's a bit more trickier. Your accountant knows the formula there too. Okay. So then you want total the previous four numbers. Okay. So add up the previous four columns. So 2976 plus 5200. Actually, it's going to sum up here to here. Whoop. Take some time to go ahead and do that for yourselves. If you don't have the this document, don't worry about it. Get a blank piece of paper and just go ahead and fill in the blank as well too. Okay. Now, in my example, what I'm saying here is it's very, we're going to claim the half. Okay, this is our general example. For example, if you can't really see this if you're not here with me, but put your left finger on the table and imagine that's your home. Okay, left finger on the table. Okay, that's where you live. Put your right finger on the table and say that's where you work. Okay, now put your middle right finger somewhere near the right finger. Okay, and this middle finger was for the business meeting. So if you drove from your home, which is your left finger, to your work, which is the right finger, but your business meeting was nearby your work, then you're driving for what? Work or the business? Business. Right, yeah. Because you had to pass your work to get to the business meeting and go home. Right. Now, put your right finger as your home, and put your left finger as your grocery shopping or the gym. and your left middle finger as a place where you did the business meeting. Now, what was you buying groceries? Now, were you driving for the groceries or for the business now? Right, because you passed by the grocery store to get to your business meeting. On the way back, you pass. So again, that's why we're saying that it's easy to say that, if you came to head office once a day for some training, or you went to, see a client somewhere, then so we're saying that generally half can be claimed. For me, it's like 90% of my driving is for the business. Okay, then you want to take that percentage of this amount. Okay, so you want to take your total yearly car expenses, multiply by 50% if it's your case, but for me it's 90%. And that's what you now put into this column above. So this now becomes this cell over here. Okay? So the whole purpose of that car chart was to figure out the total amount at the half off, and you put it at the top chart. Okay? Next is your meals and entertainment. So how much do you guys spend for meals and entertainment? Right? So figure out how much you eat per week. And I say 100 a week. I have 2 kids. They eat a lot more. But again, it's my kids eating doesn't count as business expense, right? But if I was doing a meeting with my business clients, then that becomes a write-off too, right? Okay. The most important thing here is the story. You have to have the story to show that, and the real story of what you were doing for the business, right? So this, again, so to calculate the yearly, you take 100 times by 52 weeks, but divide by 2, because it's 50% off, right? Not off, but 50% claimable. So for me, it's $2,600 a year. Now, of course, the next one is office. So if you happen to, have bought if you bought yourself a laptop in the past few years, write down the amount for a laptop. So I want you to see how much you could have, if you're smarter with your money, what you could have been able to keep to yourself, basically. Okay. So office expenses, I'll just put 4,000 for myself. Okay. And if you travel, so if you happen to take a flight somewhere for the business, so if you traveled in the past 2 years or the past 3 years, or if you plan to travel, put the amount down of where you want to go. Okay. So for me, I go to Taiwan about 3 times a year, and then so I'll put about, and me and the wife together. So of course, if you rent, okay, again that's about 20% of your rent, unless you have a home that's your primary residence, like your driver license address, but you're renting another place, whatever, then that would be 100%. But otherwise, you put your rent there, and then, but again, you need to have. Actually, I want to add one more column here, and I'm going to do it right now. Actually, since we're here, insert row. Oh shoot. Insert. Here we go. There. That's close. Sorry, folks. Just the bananas. Someone help me here. The next category I want you to put down there is all your promotion items. Okay? So that's like, if you were to buy some products to promote to someone you know, and if you happen to take all your Christmas gifts, but instead of buying Christmas gifts, you bought promotion items for your people, right? Okay, so put that amount there too, and then the business. So you have to have a business in order to have business expenses. So I want you to put $500 for business. That's like the silver package. Okay, so in your business, put $500. And then take the sum. So you want to add everything of these columns over here, add it up, and that is your total business expenses. Okay, everyone almost done? So now, what you want to do is you want to copy the total yearly expenses into here, okay? Because what we're going to do now is we have to figure out how much is your current tax bracket. So how much are you paying currently in taxes, for income? So here are the approximate tax brackets in Ontario. If you make between $0 and $41,000 a year, your tax bracket is about 20%. Okay, but really it should be $31,000. And between $31,000 a year and $80,000 a year, your tax bracket is about what? 31%. Okay, 80 to 135 is 37, and really above that is about 42%. So I'm going to assume that all of you guys, kind of want to ask you how much do you make? How much do you make? It's kind of rude. Is 31%. So just put here 31%. Okay. And I'll display this in percentages here. Okay. So if you make $50,000, for example, then your tax bracket would be 31%. Then, so to understand how this works is in your day job, the government takes tax off your pay stub, right? Every single paycheck from January to December, right? Then you now have, in my example here, I have $38,000 of business expense, right? So what happens is that if I was making $80,000 income a year, before I was getting taxed about 37% on $80,000. But now that I have $38,000 of a business expense, that lowers my income. The way how like RSPs, it lowers your income. The same concept here. So now my income is not $80,000; it's now like $42,000 or so, right? So it means that you saved yourself the tax on the $38,000. But because they tax you on every single paycheck you get from your job, what happens is that by next year, 2014, during tax time, you have a claim that you have $38,000 of business expense the previous year. I shouldn't have got taxed on, but you did. You now get back 31% of this amount. So again, that's my tax rate here, 31%, right? So this is equal to this times the tax rate. So my refund is $12,000. Okay, so go ahead and calculate your own. Maybe, yeah. So I think we have someone in the room here had $2,800 of expenses. And I believe that if you happen to have spent more of the promotion items,
Right.
like Christmas gifts, or instead of buying gifts from the Bay or Walmart, no, not Walmart, it's back by gifts, but if you went to like Old Navy or Apple Store, right? But now you transformed you bought gifts of your company's products, then that becomes right off too, right? So anyhow, so on average, the average person gets back at least $3,000 to $9,000 every single year. So this document here, can you see how powerful it is when you show someone? Because what you can say is, look, you really only have two options here. Option one is you don't have a business. You work at least 40 hours a week for how many years? Forever, right? And the current age of retirement is now age 68, right? And when you finish working and you retire, you then go and work at Walmart. And then you die. Right? That's literally what happens, right? You basically work you work a job, and then you go, you work for 40 years or 45 years, 50 years, and then you go and, if you don't have enough money to retire because most people are not retiring until age of 68, even then they don't have enough money to retire comfortably, then you work at Walmart, and then you die. So that's option one. Option two is, you come into the business, you spend $500 for the silver package. How much does that give you in posh items or fairy items? You get $1,000. Yeah, you get $500 of posh or $1,000 of fairy. That and can we all agree that you'll spend that money during shopping for Christmas time? Yes. So doesn't it make more sense to, instead of buying $500 of gifts during Christmas at like the Apple Store, to then spend $500 on the business that gave you $500 worth of products to give to people during Christmas time, right? Because now you're not promoting the Apple Store, you're promoting yourself. And when you give a gift, a posture fairy to someone during Christmas time, you attach a brochure or catalog with that together, you get more sales, right? So stop promoting other stores, making them rich, promote yourself, okay? At the same time, so there's no risk, there's zero risk. You got a business, you got the products back, that's a Christmas shopping time for you, but you also got back $12,000 in my situation. So does it make sense to spend $500, get free Christmas gifts, and get back a refund of 12 grand? Right? So, if you want to go ahead and on the webinar, type in for me how much you got back from your calculations. Would love to hear this. So again, if you want to go ahead and just put a question box in or whatever it might be and share with me, how much you got back in taxes. We had almost 3,000 here. I know some other people get like a few other thousands. Yeah. So mostly 3,000 and above. But anyhow, I hope you guys understand why this document is important. So in every single one of my presentations, either before I do the presentation, I use this to pique interest. And whenever you lead with this into a presentation, the person you're talking to is thinking, I need a business now. Then you tell them, you know what, I've done all my homework. I found the best business because it's an international company to allow for the greatest, expansion, but income and also write-offs. And let me show you what it is. So after I showed this to my friend, he joined on the spot. And then basically joined silver right away and then became diamond within 3 days. He went home, sponsored his girlfriend, who also needs tax savings as well too. So, but in the other scenario, if you don't start with this, but you end with this as a closing piece. So, even for the people that I've met who are really skeptical, like, they have all these silly objections but they still join the end because you can't deny logic. And so one question that's asked is, well, Renee, how can I be able to have business expenses if I don't have any income? And first of all, I tell someone, and many different things here. Number one is, if you actually spent an hour a week on this business, email templates, home party on a weekend, some phone calls, it's impossible to not even make like a few thousand a year. It's impossible. You gotta be, doing nothing at all, right? Even if you did nothing and you made zero profits, the CEO understands that for the first 2.5 years that some companies might not have a profit. For example, back in the .com days, a lot of people spent 20 grand on a website and they spent 10 grand on products for the website, but economy crashed, sold nothing, made zero profits, right? But if someone went to your website and bought a piece, you instantly have retail profits. So say Junior here wants to have some profits on his business, and let's say you want to buy a piece for yourself. But instead of you buying it through your IA, your friend Sohail bought it from your website, right? The profits you make, you could give it back to Sohail, and then of course your cost that you want to buy that, you give the cost back to him, so he got his money back. But now on your website, you show a profit, $50. So there's many different ways to show income on the business. And again, if you just had one branding party, you'd have income as well coming in, right? So, but for the first 2.5 years, it's okay to have a net loss. But after the first 2.5 years, if you're still not making some kind of an income, then you don't want to do this anymore. You might want to try a different business, okay? So at the end of the day, I use this document in all of my examples, all my meetings. And people used to ask me, Renee, what was your secret in closing prospects? Like, they used to call me, I don't know, like master closer or whatever they call it. It's like a weird name, right? And it wasn't rocket science. All I did was I went to the meeting, got the person's survey, just chit-chatted, and I said, hey, how's it going? Well, can I show you some really cool things about tax savings? Everyone says yes. I did this exact piece of paper, but I wrote it down for them, and then they all joined. That's all I did to close prospects because it's logical, right? And sometimes if I get really close to that prospect, I say, you know what? It's a no-brainer. You're gonna be dumb to not join. And I say that, and they're sitting there thinking, oh shoot, I don't want to be dumb. I better join, right? Because every day that you go on that you don't have a side business, if you have a full-time job, you're basically losing money out of your pocket. Think of every meal that you eat as money you're throwing away. Would you throw away money? If you saw $2 lying on the table, would you pick it up if no one else was around? Of course, right? You saw $2 on the floor, would you pick it up, right? Would you throw away $2? Right? So if you simply just did a little thing of tracking every now and then, you know, $3,000. Again, if you actually got back $3,000 tax savings, that's better than $3,000 earned. Because $3,000 earned is how much 1,800 you get back in your pocket after taxes. If you actually want to get back $3,000, you have to make at least 5,700. You know what I mean? So that's why now you know all my secrets, and now I'm not the master closer anymore. You can all become the master closers of the business as well too. And that is simply put how to understand your tax benefits. Any questions now?
The comment there, the 12,000, that's per person. So if you have a couple, you can even entice them that they can both get 12 grand.
Junior is the next master closer and tax expert here. So he was saying that that's for one person. If you have like a family with two different incomes coming in, again, you want such accounts because sometimes if you combine incomes of the husband and wife, it could be bad because if the father had 30,000 and the mother had 50,000 or 40,000 each, then you're in the 31% tax bracket level, right? If you combine the incomes, you're now at the higher tax bracket, right? At 80%, right? So in a lot of cases, if you're smart and you do the math, you want to have a separate income. They each file their own taxes. They each have their own business. So absolutely, in a lot of cases, both the husband and the wives will actually come along and actually have this as well too. Okay, they each can join themselves separately as well. Okay, so I know some parents who get this sign up their sons because they know their sons are working. The sons don't understand this yet because the parents know best and then they care for the children. They enroll their sons, right? So I knew one lady that I met who she's like 55, has been working for 30 years. And when she saw that, she joined the spot. And I said to her, imagine it, because her return was $5,000. Imagine getting back $5,000 for the past 30 years. How much would you have in the bank? 5,000 a year over 30 years is $150,000 she would have had in her bank account had she just done this, right? So this becomes very large. Don't think small scale. Yeah, think long term, right? So, so for me, I joined. My friends who are engineers, programmers, all joined because they want tax savings as well too, right? So, and that's how easy this business is. Any other questions or comments before we close the call? We do have some really quick announcements though. If you are a diplomat or a ambassador, there is a very special event happening. It's called CDSC at the Sea. And what that basically is, I'm just going to show you guys here. If you are a diplomat or higher, okay, there's a very special getaway with the CEO. It's a whole day fun. You have to RSVP because we don't know how much food to buy. So if you haven't RSVP'd, please send an email right away to sarah@gwtcorp.com and confirm that you are going to this event. The CEO is spending a lot of money on us here. I'm talking about food. I'm talking about like all these crazy things here. So you want to make sure you can RSVP for this event here. Okay, but also we also have the Customer Appreciation Day happening. The Customer Appreciation Day. Again, you have to RSVP because there's going to be a lot of things for kids as well too. So what you want to do here, as soon as my page loads, okay, is for the Customer Appreciation Day barbecue on August 17th. You want to go again and RSVP as well too. Okay, so you want to make sure you please RSVP to sarah@gwtcorp.com to confirm that you are going, so we can figure out how much food to buy. Again, it's a whole day fun, and you get to hang with the CEO, and it's just hot dog, hamburgers, refreshments, music, face painting, games, a bouncy castle for the kids. The gallery will be open. Bring your family there. Great time to bring on prospects. Right? Hey, come on for a free barbecue. Okay. I'll go to free barbecue, and there's like face painting, like hello, right? So bring your guests out to that event as well too. Okay. So I'm actually going to share this on my page. Anyone want to join me? Boom. That's how you promote. Okay. And of course, the CDC to C was about promoting stuff here. I'm gonna go and share this on my own page too, guys, right? And say, anyone want to join me? Party time, yeah. Unfortunately, when I don't do speedos, I only do bathing suits kind of thing. Yeah. All right, so guys, folks, so that's the train for tonight. Any last questions, comments? I do appreciate. Okay, we have some questions here. Is this recorded? The answer is yes, on my tax information website. Again, we have the previous training. I'll put this new one up right now as well too. And again, thank you very much, Steve Quant, for those comments there. Any last minute comments or questions before we close the call tonight? I guess I'm such a good at. Oh, here we go. Sean Haynes says, great training, bro. Mr. Haynes, my brother from another mother.
Yes, my brother too.
Really, yeah. We have Mr. Errol Trent saying, great training, my friend. Thank you, Errol, as well too, and thank you, Sean. Question here is, are your spreadsheets available? And this is yes. So Debbie Taylor, on my website again, thehourgwt.com, left banner, tax information. If you click on the templates here, the business expenses tracking sheet template, you click on that. Actually, so don't click on it. It says right click and save as. So right click and save as. You can download that expense. I actually put this on Google Drive because Google Drive I can access from my phone or from my laptop. It's lifetime and I don't have to worry about my files being deleted. It's Google Drive, so I use it on Google Drive myself as well too. And so Annalie Riga says, thanks Renee, Superman, and thank you Annalie. I'm feeling like Superman today. Thank you very much for that comment there, Annalie. And Nando says, great training, wow. Thank you very much, Nando. Everyone, have yourselves a wonderful night. And if you have any questions, let me know. But again, guys, I can't stress enough, you have to show all of your prospects this document, whether they're going to join it. If they're going to join, let them join. You don't want to create more questions. They're going to join, right? If they haven't joined yet, then you show this document to help you in the closing process. Make sense? Okay. Have a wonderful night, guys. Bye-bye.